Wealth creation has many shades. Stocks for sure are one of them. You would have heard stories of people becoming millionaires after investing their money in a good company. But that didn't happen in a day. They would have realized the fruits of their investment after 5 or 10 years. The very nature of stock investment may at times leave the best of minds scratching their head. If you are new to equities, then we have a handy guide in place to help you navigate this uncertain world. Please watch the video till the end, as we have shared 15 stock ideas which you can think of buying. We have also shared the details of our stock selection criteria in this video. Marico Ltd. Marico Ltd is engaged in the business of branded consumer products and services. The company operates in 2 segments, consumer products and others. Its consumer products include coconut oils, other edible oils, hair oils and other hair care products, male grooming products, fabric care products, healthy foods, soaps, healthcare products and female beauty care products. Other segment is engaged in skin care. In India, it manufactures and markets products under the brands, such as Parachute, Neha, Saffola, Hair and Care, Revive, Shanti, Oil of Malabar, Medica, and Manjal. Its international portfolio includes brands, such as Fiancé, Hair Code, Camellia, Aromatic, Kville, Hercules, Black Chic, Ingwe, Code 10, X-Men, Levite and Tuan Fat. It is present in skincare solutions business under the brand name Kaya in India and international markets, and the brand DermaRx in Singapore and Malaysia. Sales growth for last 10 years is 12%. Return on capital employed for last 10 years is 29%. Free cash flow of firm for last 3 years is 604.33 crore. Cash flow from operations for last 3 years is 727.33 crore. Debt to equity ratio is 11%. Market cap is 45,846 crore. ITC is one of India's foremost private sector companies with a market capitalization of $45 billion and a turnover of $7 billion. ITC ranks among India's most valuable company brands. ITC also ranks among Asia's 50 best performing companies compiled by Business Week. ITC has a diversified presence in FMCG, hotels, paperboards, and specialty papers, packaging, agri-business, and information technology. While ITC is an outstanding market leader in its traditional businesses of cigarettes, hotels, paperboards, packaging and agri-exports, it is rapidly gaining market share even in its nascent businesses of packaged foods and confectionery, branded apparel, personal care, and stationery. The company also in the business activities of hotels, FMCG, others, agri-business, FMCG, cigarettes, paperboards, paper, and packaging. Sales growth for last 10 years is 11.32%. Return on capital employed for last 3 years is 34.94%. Free cash flow of firm for last 3 years is 9,122 crore. Cash flow from operations for last 3 years is 12,126 crore. Debt to equity ratio is 0%. Market cap is 238,599 crore. Exide Industries Ltd is a well-known name in the adhesives market. The company has diversified into various segments such as adhesives and sealants, construction and paint chemicals, automotive chemicals, art materials, industrial adhesives, industrial and textile resins and organic pigments and preparations. They have brands like Fevicol, Dr. Fixit, Cyclo, Roff, M-Seal, Terminator, Fevistick, Feviquick, etc. Exide manufactures wide range of solution in waterproofing, repair materials, coating, flooring, sealants and admixtures. In fabric care segment, the company has created products like brightener, starch, stain remover and whitener. It markets these products under the brand name Ranipal. Sales growth for last 10 years is 13.55%. Return on capital employed for last 3 years is 37.37%. Free cash flow of firm for last 3 years is 595 crore. Cash flow from operations for last 3 years is 811 crore. Debt to equity ratio is 6%. Market cap is 70762 crore. Berger Paints India Ltd is the third largest paint manufacturer and second largest manufacturer in decorative paints. They have technical license agreement with DuPont Performance in the area of automotive coating, Nippon Paints for new generation automotive coating, Orico Australia Limited for protective coating and Tiger Waklaku, Farben Fabric GmbH, Australia for specialized powder coating. The company also has a joint venture with Nippon B Chemical for manufacturing of coatings for plastic substrates used in automobiles and mobile phones. Sales growth for last 10 years is 14.46%. Return on capital employed for last 3 years is 29.14%. Free cash flow of firm for last 3 years is 169 crore. Cash flow from operations for last 3 years is 459 crore. Debt to equity ratio is 29%. Market cap is 50,358 crore. Asian Paints Limited manufactures paints in the category of decorative, automotive and industrial segment. Apart from these, the company also manufactures various accessories like wall primer, wood primer, putty and stainers etc. The company has a state-of-the-art supply chain system which uses cutting-edge technology to integrate all its plants, regional distribution centers, outside processing centers and branches in India. They also have a big and experienced R&D team which has successfully managed to develop high-end exterior finished and wood finishes in-house, which was earlier imported into the country. These products are currently marketed under Asian Paints Elastomeric High Stretch Exterior Paint and Asian Paints Wood Finish respectively. Their product range includes automotive paints, decorative paints, industrial paints and ancillaries, range of ancillaries like primers, fillers, stainers, and a lot more. Sales growth for last 10 years is 12.13%. Return on capital employed for last 3 years is 35%. Free cash flow of firm for last 3 years is 927 crore. Cash flow from operations for last 3 years is 1933 crore. Debt to equity ratio is 11%. Market cap is 164,781 crore. Abbott India Ltd is a healthcare company that discovers, develops, manufactures and markets various products in area of anesthesia, animal health, anti-infectives, cardiovascular, diabetes care, hematology, immunodiagnostics, and clinical chemistry, immunology, metabolics, molecular, neuroscience, nutrition, oncology, pain care, point of care, renal care, vascular, virology. The company has in-house development and medical teams to undertake product and clinical development tailored to the needs of the Indian market. Their product range is classified in 3 segments, namely primary care segment, i.e. products in the areas of pain management, gastroenterology, with well-known brands like Brufen, Digene, Cremafin; specialty care segment that is metabolomics, urology, neurology and psychiatric solutions in the areas of thyroid, obesity, diabetes and benign prostatic hyperplasia; and hospital care segment that is products in the field of anesthesiology and neonatology, namely Ferrane, Severane, and Savanta. Sales growth for last 10 years is 18.64%. Return on capital employed for last 3 years is 37.50%. Free cash flow of firm for last 3 years is 323 crore. Cash flow from operations for last 3 years is 319 crore. Debt to equity ratio is 7%. Market cap is 32,433 crore. Dr. Lal Path Labs is engaged in the business of running laboratories for carrying out pathological investigations of various branches of biochemistry, hematology, histopathology, microbiology, electrophoresis, immunochemistry, immunology, virology, cytology, and other pathological and radiological investigations. Sales growth for last 10 years is 15.06%. Return on capital employed for last 3 years is 33.94%. Free cash flow of firm for last 3 years is 168 crore. Cash flow from operations for last 3 years is 233 crore. Debt to equity ratio is 0%. Market cap is 15,445 crore. Nestle India Ltd is an India-based company engaged in food business. Nestle is the world's leading nutrition, health, and wellness company. The company was founded in 1866. The food business incorporates product groups through milk products and nutrition, beverages, prepared dishes and cooking aids, chocolates and confectionery. The company's brands include Nescafé, Maggi, Milky Bar, Kit Kat, Barone, Milkmaid, Nestea, Nestle Milk, Nestle Slim Milk, Nestle Dahi and Nestle Jira Writer. The company's beverages include Nescafé Classic, Nescafé My First Cup, Nescafé Cappuccino, Nescafé Sunrise Premium, Nescafé Sunrise and Nestea Iced Tea. The company's holding companies are Nestle SA and Maggi Enterprises Limited. Sales growth for last 10 years is 9.20%. Return on capital employed for last 3 years is 74.04%. Free cash flow of firm for last 3 years is 1,864 crore. Cash flow from operations for last 3 years is 2034 crore. Debt to equity ratio is 3%. Market cap is 166,124 crore. H Industries Ltd, located in Bangalore, India, are the exclusive licensees of Jockey International Incorporated, USA, the manufacture and distribution of the Jockey brand innerwear and leisure wear for men and women in India, Sri Lanka, Bangladesh, Nepal and UAE. Page Industries is also the exclusive licensee of Speedo International Limited for the manufacture, marketing and distribution of the Speedo brand in India. The company was set up in 1994 with the key objective of bringing the world-renowned brand Jockey to India. Its promoters, Genome family, who have been associated with Jockey International Incorporated for 50 years as their sole licensee in the Philippines. Sales growth for last 10 years is 27.33%. Return on capital employed for last 3 years is 64.61%. Free cash flow of firm for last 3 years is 266 crore. Cash flow from operations for last 3 years is 318 crore. Debt to equity ratio is 20%. Market cap is 21,607 crore. Relaxo Footwears Limited started off with the manufacture of Hawaii slippers and subsequently diversified into manufacturing casuals, joggers, school and leather shoes. Relaxo is one of India's most quality-conscious and progressive footwear companies. The product range of the company includes Hawaii, Canvas, Dip, Bahamas, Leatherite, Joggers, and Flight. Sales growth for last 10 years is 18.85%. Return on capital employed for last 3 years is 26.95%. Free cash flow of firm for last 3 years is 55 crore. Cash flow from operations for last 3 years is 152 crore. Debt to equity ratio is 13%. Market cap is 15,564 crore. Kotak Mahindra Bank Ltd. Kotak Mahindra Bank Ltd is engaged in commercial banking, investment banking, stock broking, car finance, asset management and life insurance. Its segments include Treasury, Investments and Balance Sheet Management Unit, BMU, which deals in debt, equity, money market, forex market, derivatives and investments and dealership of government securities and BMU. Retail banking, which includes lending, branch banking and credit cards. Corporate/wholesale banking, which includes wholesale borrowings and lending, vehicle financing, which includes retail vehicle finance and wholesale trade finance. Other lending activities, which includes financing against securities, securitization and other loans/services. Broking, which includes brokerage income and forex broking, and advisory and transactional services, which includes financial advisory and transactional services. Sales growth for last 10 years is 21.95%. Return on asset for last 3 years is 2.10%. Return on equity for last 3 years is 13.57%. Net interest margin for last 3 years is 3.80%. Gross non-performing assets is 2.23%. Market cap is 262,685 crore. HDFC Bank Ltd. HDFC Bank Ltd offers a wide range of commercial and transactional banking services and treasury products to wholesale and retail customers. The bank has 3 key business segments. Wholesale banking services. The bank's target market ranges from large, blue-chip manufacturing companies in the Indian corporate to small and mid-sized corporates and agri-based businesses. Retail banking services. The objective of the retail bank is to provide its target market customers a full range of financial products and banking services, giving the customer a one-stop window for all his/her banking requirements. Treasury. Within this business, the bank has 3 main product areas: foreign exchange and derivatives, local currency money market and debt securities, and equities. The treasury business is responsible for managing the returns and market risk on this investment portfolio. The services offered by the bank include personal banking accounts and deposits, loans, cards, forex, investments, and insurance. NRI banking, accounts and deposits, remittances and investments and insurance loans payment services. Wholesale banking, corporate, small, and medium enterprises, financial institutions and trusts and government sector. HDFC Bank was the first bank in India to launch an international debit card in association with Visa, Visa Electron, and issues the MasterCard Maestro debit card. Sales growth for last 10 years is 22.37%. Return on asset for last 3 years is 1.96%. Return on equity for last 3 years is 17.13%. Net interest margin for last 3 years is 3.85%. Gross non-performing assets is 1.00%. Market cap is 603,080 crore. Bajaj Finance Limited. Bajaj Finance Limited is engaged in the business of retail financing. The company is engaged in providing finance for two-wheelers, consumer durables, personal computers, personal loans, insurance services, etc. They also extended their product line with the launch of IPO financing for high net worth customers. Sales growth for last 10 years is 37.37%. Return on asset for last 3 years is 3.71%. Return on equity for last 3 years is 20.80%. Gross non-assets is 1.61%. Market cap is 198,932 crore. Pfizer Limited came to India through a company named Dumex. Their first production unit was set up at Dharukhana in Mumbai. They manufactured products like Protein X, Isonex, Bicosules, and Corex. The product range of the company includes prescription drugs. Pfizer manufactures prescription drugs such as Viagra, Lyrica, Viagra, Dolonex gel, Ponston, Citralka Liquid, and many more. Consumer Health produces over-the-counter formulations and drugs such as Benadryl cough, Coolmint Listerine mouthwash, rash-free, Caladryl, Sloan's Balm, etc. Animal Health manufactures products for animal care, namely Amoxicillin, Vanguard 5/L, Stafac, Furia, Qualidrops, Catacil, Bayrosin, Nutrimilk, etc. Sales growth for last 10 years is 11.94%. Return on capital employed for last 3 years is 20.76%. Free cash flow of firm for last 3 years is 323 crore. Cash flow from operations for last 3 years is 319 crore. Debt to equity ratio is 0%. Market cap is 18,906 crore. Exide Industries Ltd manufactures the widest range of storage batteries in the world, covering the broadest spectrum of applications. The company's product range includes automotive batteries. In India, the company markets the products under Exide, SF, Sonic and Standard Furukawa brands and supplies to all car and two-wheeler manufacturers. In international market, they sell products under Dinex, Index and Sonic brands. Industrial batteries in India, they sell products under Exide, Index, SF, Seal and PowerSafe brands, and in international market under Seal, Chloride and Index brands. Industrial batteries cater mostly to the infrastructure sector such as railways, telecom, power plants, solar cells and other industrial segments including uninterrupted power supply, inverters and traction batteries, submarine batteries. The company is also engaged in manufacturing of high-end submarine batteries. They are one of the 5 companies in the world which has capacity to manufacture submarine batteries for Russian and German types. They manufacture 2 to 3 submarine batteries a year for India's defense requirement. Sales growth for last 10 years is 15.88%. Return on capital employed for last 3 years is 23.15%. Free cash flow of firm for last 3 years is 535 crore. Cash flow from operations for last 3 years is 1,179 crore. Debt to equity ratio is 3%. Market cap is 13,553 crore. Sales growth. Sales growth is the percent growth in the sales of a business from one fiscal period to another. The standard sales growth for good companies is greater than 10%. Sales growth equals current year sales minus previous year sales, divided by previous year sales. ROCE, return on capital employed, or ROCE, is a long-term profitability ratio that measures how effectively a company uses its capital. The metric tells you the profit generated by each rupee employed. The standard ROCE for good companies is greater than 15% or cost of capital, whichever is higher. ROCE equals EBIT, earnings before interest and tax, divided by capital employed. FCFF, free cash flow to the firm. FCFF represents the amount of cash flow from operations available for distribution after depreciation expenses, taxes, working capital, and investments are accounted for and paid. The standard FCFF for good companies is greater than 0. FCFF equals net income plus depreciation plus interest times 1 minus tax rate, minus fixed capital investment minus change in working capital. CFO, cash flow from operation. CFO indicates the amount of money a company brings in from its ongoing, regular business activities, such as manufacturing and selling goods or providing a service to customers. The standard CFO for good companies is greater than 0. D ratio, the debt to equity, DE, ratio is calculated by dividing a company's total liabilities by its shareholder equity. The standard DE for good companies is less than 50%. DE ratio equals total liability divided by total shareholders' equity. ROA, return on assets, ROA, is an indicator of how profitable a company is relative to its total assets. ROA gives an idea as to how efficient a company's management is at using its assets to generate earnings. The standard ROA for good companies is greater than 1%. ROA equals net income divided by total assets. ROE, the return on equity or ROE ratio, measures the rate of return that the owners of common stock of a company receive on their shareholdings. Return on equity signifies how good the company is generating returns on the investment it received from its shareholders. The standard ROE for good companies is greater than 10%. ROE equals net income divided by shareholders' equity. NIM, net interest margin, NIM, is a measurement comparing the net interest income a financial firm generates from credit products like loans and mortgages, minus the outgoing interest it pays holders of savings accounts, certificates of deposit, CDs. The standard NIM for good banks is greater than 2.5%. Net interest margin equals interest earned minus interest paid, divided by average earning assets. Gross NPA, a non-performing asset, NPA, refers to a classification for loans or advances that are in default or in arrears. A loan is in arrears when principal or interest payments are late or missed. A loan is in default when the lender considers the loan agreement to be broken and the debtor is unable to meet his obligations. The standard gross NPA for good banks is less than 2.5%. Market capitalization is the aggregate valuation of the company based on its current share price and the total number of outstanding shares. It is calculated by multiplying the current market price of the company's share with the total outstanding shares of the company. We have taken companies with more than 10,000 crore market cap. Market cap equals share price multiplied by number of outstanding shares. This is our sample portfolio. We have taken the initial investment amount as 10 lakhs. As per our model, we believe that 60% should be into equity and 40% should be into cash at this level. For this month we have added Exide Industries Ltd and Pfizer Ltd. The current valuation for the stocks is highlighted in green color.
So friends, thank you very much for watching the video. If you like this video, then please like, share, comment and subscribe for more investment related videos.